Hello, I'm Donald Leggett, and welcome to the latest Focus IR London South East Investment Trust interview. I'm joined today by Jacqueline Broers. She's one of two deputy portfolio managers at Utilico Emerging Markets Trust, which specialises in emerging markets, utilities, infrastructure and telecoms. Welcome, Jacqueline.
Hi, Donald.
Let me start with Utilico being a closed-end investment trust. It's sometimes said that investment trusts are aimed at quite sophisticated investors. Do you agree with that as an analysis, or do you think they can be a useful part of anybody's broad-based investment portfolio?
I definitely think they can be used by anyone as part of their broad-based investment portfolio. Investing in an investment trust is really similar to investing in a unit trust or an OIC. Funds from shareholders and investors are pooled, and then they're invested in a diversified portfolio. Which means that investors can gain exposure to a number of different investment opportunities. The advantage of being in a closed-ended fund, though, is that buying and selling of assets in the fund is not driven by redemptions or inflows. So the investment decisions that we can make, for instance, can be very much for the longer term. We don't have to sort of put up with the market volatility as much because we don't have to worry about liquidity and things like that so much. Market demand also dictates the trust's share price. And that can either be above or below sometimes the value of the assets of the fund, so the net asset value. And that can also therefore provide an exciting entry opportunity for investors. I mean, UEM currently is trading around about a 15% discount, which means it's a really good time to invest as you're buying a pool of assets that is probably cheaper than it could potentially be at other times. The investment managers also, which I think is really great for shareholders, has an independent board overlooking it, which means that it can provide a really good oversight of the investment manager and provide a comfort blanket to investors. They can keep on top the board can keep on top of the way in which the manager is running the fund, and then the board can really scrutinise how the manager is performing. And if they're not performing well, then the board does have the ability to remove the mandate of that investment manager and change it if needs be. Again, which I think is really good for individual investors.
And what attracts you to the infrastructure and transportation sectors in particular, and why do those make good investments in emerging markets?
Firstly, what I really like about infrastructure and the transportation sector is it's really tangible. You can see it, you can touch it, and you can really clearly see the impact of what good investment or good investment in infrastructure has on the quality of people's everyday lives. And why do those investments are so good within emerging markets? Well, as we see the expansion of GDP per capita within the emerging markets, the growth of the middle class, demand for infrastructure grows. And if I take that back to basics, I mean, if you look at sort of the individuals within countries that are not so wealthy, then demand for everyday basics such as food and essential services such as clean running water, sanitation, gas and electricity are all there. And that all requires infrastructure investments. As individuals then sort of demand more goods and services, they might buy more consumer products, etc. That will require investment into ports, logistics and the road network. And as we see individuals sort of climbing up that sort of value chains and moving into sort of the middle class, we see the progression for a better quality of life increase. And then they may want to demand cars, they want to go travelling, they might want better healthcare. And that all, again, requires investments into roads, airports, hospitals, education, railway companies, all of that, which is really exciting for us.
And in what way do transport and infrastructure investments like ports, road, railway, airports, in what way do they deliver stable long-term returns for investors such as yourself?
Well, all the investments which we are investing into, we hope provide us with long, stable investment returns. But the way in which they do it, I suppose, depends on assets. It varies from asset to asset. But essentially, the assets that we invest in, especially within the transportation sector, typically tend to have long-term concession contracts underlying the assets, such that they're leveraged to grow with the underlying economy. As the emerging markets grow, so will these assets. And that helps provide the sort of the long-term stable cash flows. And a lot of them can provide it from the essential services which they're offering. For example, like I mentioned earlier, toll road, it may be the key road into a city. Therefore, as we see, the ownership of cars increase, we'll see traffic flows increase. And as urbanisation increases within the emerging markets, again, these cities will grow, and that will see that asset grow. a port, for example, as well. We tend to invest into origin and destination ports, which means that as we see the growth of consumption within a country, we will see the base level volumes also increase. And therefore, and also because the assets we're investing in typically can be monopolistic, they can control the tariffs, but also some of the concession contracts, which we have, say, on the toll roads, will be inflation linked, which means that they are, again, able to sort of weather the sort of inflationary pressures that we're currently seeing quite well and help provide us with that long-term return that we're looking for.
Okay. Why don't you give us a couple of long-term investment examples, typical Utilico long-term investments in the infrastructure space, and some ones that you think are performing well?
Yeah, I mean, if I go for ICT, which is currently number 2 in our portfolio, I mean, we've been investors for over 10 years within ICT. It is a container port operator. It's listed in the Philippines. It has a market cap of around $7.4 billion, but it operates 33 container terminals across 20 countries, primarily within emerging markets. And all the ports that it operates have long-term concession agreements and are effectively levered to that, what we call the emerging markets, again, driving or increasing consumption and the growth of the middle class. But what's so great about ICT and why do we like it so much? They've got a very strong management team, and the strategy which they deploy is effectively to acquire ports that have been poorly managed historically. And they will go in, acquire these ports, rip out the excess costs, and therefore improve the operational efficiencies. And then as the volumes increase, you can really see the benefit, the bottom line, due to the high operational leverage of these assets. And you can see that in the financials which have come through. They've driven, over the last 5 years, EBITDA has expanded by 86%, but volumes are only increased by 25%, which is really just showing you that operational leverage coming through. The asset still is relatively quite cheap at 8 times EBITDA with a very, very strong outlook. Another asset, if I go from Asia to LATAM, is Rumo. Rumo is also in our top 10 within the UEM portfolio. It's one of Brazil's largest railway operators. It has a market cap of around $8.2 billion. And if we look at Brazil, I mean, Brazil is one of the largest suppliers of grain in the world, being responsible for 36% of soya and 10% of corn on a global basis. And as we're seeing improvement in agricultural productivity within Brazil, Rumo is incredibly well placed to capitalise on it because it operates around just over 13,000 kilometres of railway and also operates 33,000 rail carts. And Rumo is one of the only real credible transportation solutions within Brazil at the moment. We're seeing capacity constraints on the waterways and also the roadways. Again, placing Rumo in a really good position.
And my final question to you, Jacqueline. UAM have achieved an annualized return of 9.3% over 17 years. Do you continue to see sufficient investment opportunities in your sector to be able to keep achieving these very solid returns?
Yeah, definitely, Donald. The number of opportunities that we're seeing continually is growing. Opportunities are either coming from new IPOs coming to market, but also just from companies that are currently listed that may have fallen out of favour or valuations have become cheaper, which is providing us with a really exciting entry opportunity. But again, these assets may be cheaper, but they still have what we see long-term potential. But also, within our space, the market dynamics are constantly changing. We touched on global trade, but within UEM, we've identified 4 megatrends, which we really believe are driving the sort of the long-term investment horizon. As I said, we've got global trade, we've got digitalization coming through, which is effectively the use of more sort of technology and digital products into the market. We've got social infra, we've got this move, this energy transition, this move to renewable energy. And that is providing us with really incredible, exciting investment opportunities. And all these things that we are constantly watching and to ensure that the assets, I suppose, within the UEM portfolio are obtaining the best possible return for our investors.
Jacqueline Broers, that was absolutely fantastic. Thank you so much indeed for joining us today. That was Jacqueline Broers, Deputy Portfolio Manager at Utilico Emerging Markets Trust. That was a terrific insight, a deep dive into the Utilico portfolio. For more company information and to access the company bulletin board, please go to the Utilico pages on London South East. And meanwhile, do follow us on Twitter. That's @_FocusIR_. and also at London South East, and register on London South East YouTube to receive alerts to our Utilico Investment Trust's interviews and content just like this interview. Thank you very much indeed for watching.